It's not just about how much they earn. It's about how much they keep. And more importantly, it's about how well they understand the tax system. The truth is, the wealthy play by a different set of rules that are available to everyone, but only a few choose to learn. In this video, we'll uncover 10 powerful tax secrets that millionaires use to build and protect their wealth, legally. These aren't shady loopholes. These are strategic moves based on knowledge and preparation. Stick around until the end, because we're not just exposing the secrets, we're showing you how to start using them today. Millionaires don't rely on a salary. They know that earned income is taxed the most. Instead, they structure their lives around capital gains, business income, and tax-advantaged investments. Capital gains are taxed lower than salaries in most countries. If you earn $100,000 in salary, you might pay 30% or more in taxes. But if you make $100,000 from a long-term investment, you might pay 15% or less. And sometimes, nothing at all. A classic example is Jeff Bezos. He made a salary of under $100,000 as Amazon CEO for years. Yet he grew his wealth in the billions, thanks to stock value and capital appreciation. Here's the key takeaway: shift your income strategy. Focus on what is taxed less, assets, not hours. Millionaires live through their business. And this is something most people never consider. Let's say you start a small online consulting business. The moment you set up an LLC, a world of tax opportunities opens up. Your laptop? A write-off. That Zoom Pro subscription? Deductible. That trip to Miami to attend a conference? Also deductible. You're not spending less. You're just spending smarter. Even a YouTube channel can be a business. Once it earns money, you can treat your video gear, editing software, internet, phone bills, as business expenses. Millionaires optimize everything they do for tax efficiency. Then comes depreciation, the silent tax hero. Imagine buying a rental property. Let's say it costs $300,000. You're allowed to depreciate that cost over 27.5 years in the US, which equals about $10,900 per year in losses on paper. Even if your property goes up in value, you get to write off thousands each year. Now combine that with rental income. You might be making $2,000 per month in rent. That's $24,000 per year. But after depreciation and expenses, your taxable income might be close to zero. This is how real estate investors build wealth rapidly. They use money they didn't pay taxes on to buy more assets. And then there's the tax-free magic of retirement accounts. Millionaires don't just use regular retirement funds. They use every tool: Roth IRAs, SEP IRAs, solo 401ks, and even health savings accounts. A Roth IRA lets you invest post-tax money that grows tax-free, and you'll never pay taxes on it again. It's like planting a money tree that Uncle Sam can't touch. Want an example? If you invest $6,000 a year in a Roth IRA for 30 years, assuming an 8% return, you'll end up with over $680,000, tax-free. That's life-changing money. And millionaires make sure they max these out every single year. Wealth protection is key too. Millionaires don't just build wealth, they shield it. They use trusts. Family trusts, land trusts, charitable remainder trusts. These aren't just for billionaires. They help you avoid probate, reduce estate taxes, and control how your assets are passed on. Want to pass your house to your kids without triggering taxes or lawsuits? A trust can do that. Want to donate to a charity and receive income from it for life? There's a trust for that too. And then there's one of the most powerful tools, the 1031 exchange. It allows real estate investors to sell a property and buy a new one without paying taxes on the gain, as long as they reinvest. So if you bought a duplex for $200,000, sold it for $300,000, you'd normally pay capital gains on the $100,000 profit. But with a 1031 exchange, you defer the tax by rolling that money into a new property. You keep growing your empire without paying a dime in taxes, yet. And yes, the keyword is yet. Taxes are only due if you sell and cash out without reinvesting. Many investors never do. They pass it on, tax-free, through, you guessed it, a trust. But all these strategies mean nothing without the right team. Millionaires don't go at this alone. They hire CPAs, tax attorneys, and financial strategists who specialize in building wealth. One smart accountant can save you tens of thousands per year, just by setting up your books right. That's not a cost. It's an investment. And they make sure to review their tax plan every year, not just when it's time to file. Then there's a lesser known move, tax loss harvesting. Let's say you have $10,000 in gains on one stock, and $10,000 in losses on another. By selling both, your net gain is zero, and you pay no tax. Even better? You can carry excess losses forward into future years. Millionaires do this at the end of every year to fine-tune their tax bill. Want to give back and save on taxes? Millionaires do that too, the smart way. They donate appreciated stock instead of cash. So if you bought a stock for $1,000 and it's now worth $10,000, you can donate it and deduct the full value, and never pay capital gains. Some even donate to their own foundations, then choose how that money is spent. It's charity with control, and it's all perfectly legal. The final secret? They start early. Millionaires don't wait until tax season. They plan in January for what they'll deduct in December. They think in decades, not weeks. If you're watching this video now, you're already ahead. Because most people will never hear these strategies, or worse, they'll hear them and never act. But you? You now have the power to choose differently. So here's your next step. If you want to understand how wealthy people think, how they manage their money, and how they legally pay less in taxes, then check out the top books and tools I've personally selected for you. Visit the link in the description below. It's your shortcut to learning directly from the minds that built generational wealth. If you're serious about financial freedom, take the time to study these strategies. Read, apply, repeat. And finally, which of these tax strategies surprised you the most? Was it depreciation? Trusts? The way they use losses as tools? Comment below, I want to know. Also, like this video if you learned something new. Hit subscribe if you're ready to transform your mindset and your money. And ring the bell so you don't miss future videos packed with powerful insights from the world's most successful minds. Thanks for watching. Your journey to millionaire thinking starts now.